U.S. retail sales and jobless claims were better than expected on Thursday. That offers more support for a hawkish rethink of Federal Reserve rate cuts. With the dollar gaining on bets on Fed being on the sidelines, the real question is, can the dollar's rebound gather some pace? The dollar index marked a second consecutive week of gains, having rallied over 2% since the July 1st low. The recent gains are modest at best when compared to the steep losses in the first half of 2025, that's this year. However, the dollar has realigned with core macro drivers and notably re-established its positive correlation with 10-year yields. Key bets are that this dollar return functionality reduces the likelihood of new sell-offs unless Trump fires Fed Chair Jerome Powell. That was reflected in Wednesday's brief dollar collapse. So far, incoming data, including inflation, backs a delayed Fed rate cut view. Without Trump's relentless pressure, September Fed rate cut bet wouldn't even be on the table. Still, anecdotal evidence points to higher dollar hedging activity, which has contributed to keeping the greenback weak. Data showed $311 billion worth of net capital inflows in May, reversing a very modest $14 billion outflow in April. This suggests foreign investors have not lost confidence in dollar-denominated assets yet. The dollar slipped a touch on Friday as Fed Governor Waller backed a July interest rate cut to support a softening labor market. But that message failed to catch on in money markets, with swaps pricing less than a 60% chance of a quarter-point cut in September. The futures market assigns no probability to easing this month. Elsewhere, Japan's election on Sunday might trigger a break above 150 in the yen against the dollar. The renewed interest in the dollar is at play unless Trump reiterates his tariff rhetoric.